Okay, I think we're going to go ahead and get started. For those of you watching this on demand, please keep in mind that this recording comes from a webinar we did for Texas brokers. So I apologize, all the examples are based in Texas, but the general information is the same for most states that cover and carry GAP. So let's go ahead and get started. We're going to talk about GAP insurance for individual and group health plans. We're coming up on an open enrollment period that's probably going to be one of the slowest we've had in probably since the beginning in 2015. And that's only because we are coming off of the heels of a very extended SEP. I don't believe we're going to be that busy this year, and busy that we will be fixing clients' plans who qualified for American Rescue Plan discounts and plan changes and things like that, especially those who did qualify for the unemployment benefit and won't in 2022. I think the majority of our time is going to be spent doing that and not selling new health insurance this year. So I think GAP is going to play a huge part in that role because a lot of your clients are going to see price increases that they didn't have this year with the pandemic, and GAP will go a long way to getting their prices down and still keeping them into an acceptable level of deductible and out of pocket. So real quick before we get started, introduce myself. My name is Brian Douglas. I'm the CEO and lead broker at Protect Health in Las Vegas, Nevada. I've been in the insurance business since 2007. I specialize in health and life. I have 30 years of marketing experience myself with a degree in marketing. Protect Health is one of the largest individual health insurance agencies in Nevada. In fact, we carry about 8% of the Nevada on-exchange market. So that's all within our agency. We've been in business since 2014, and we are a preferred broker with Nevada Health Link. We have 18 core agents and 129 agents now in our associate channel, and that is growing every day. So we're not an IMO, not an FMO, we are an agency. So we cater to our agents and not to the numbers. And we can usually get our agents well above street level commissions. And we, of course, always offer bonuses and incentives that a lot of IMOs and FMOs don't, in addition to the carrier bonuses. So let's get started in talking about GAP. First, I want to talk about what GAP is not. This is probably important because it's a very confusing name, and you'll see why. First of all, GAP is not an insurance supplement plan. It's not the same by any stretch of the imagination, and that's because it's not like your other typical indemnity plans. In most cases, there is no confusing claim forms. In fact, there's no confusing claim forms, but in most cases with these GAP plans, there are no claim forms at all. It is literally just a separate health insurance card when you go to the doctor, and we'll go into more of that. It is not available without a separate ACA compliant health plan or short-term insurance plan. And it is generally still not known to exist by the general public. It's been available since early 2020 in its current form, but because the plan prices on the ACA have been considerably low, there hasn't been a need for it, but that need is quickly growing as the out-of-pockets increase. I think in 2022, the out-of-pocket max will be $91.50 if I'm not mistaken. But we'll just have to see, or I'm sorry, $85.50, I apologize. We'll just have to see where that ends up. But it's generally not known, and it's also not the same as the GAP insurance you purchase when you buy a new car. So that's where a lot of people get confused. GAP, same name, doesn't even do the same thing. So GAP it is a simple, inexpensive hospital indemnity plan to cover costs typically paid by the consumer. Again, like I said, it does not require any claim forms in most cases, but simply it's just a secondary insurance card. It's a complement to health insurance plans and works on individual health insurance both on, off exchange, short-term, and most group plans as well. It is one of the most comprehensive products available and, like I said, generally unknown to brokers and consumers, but it is growing in popularity, I will give it that. Unlike automotive GAP, it is designed to reduce and eliminate your consumers out of pocket to protect themselves, not like an automotive GAP to protect the bank. So let's talk about in a nutshell. It pays your client what they would typically have to pay out of their own pocket for co-insurance, co-pays, and out-of-pocket expenses when they visit doctors, specialists, urgent care, emergency rooms, labs, things like that. It pays 100% of the cost when they're admitted to the hospital for most surgeries, professional services like chemo and radiation, even on an outpatient basis. It can reduce or eliminate deductibles, co-pays, and co-insurance on traditional health insurance, allowing you as the broker to sell high deductible plans. That was strange. Allowing you to sell other plans like lower cost bronze plans and HSA plans. And it actually could eliminate the need for a client to even fund an HSA plan. And in some cases, they will be out of pocket far less than they would with HSA. It can be added to most individual or group ACA plans or short-term plans longer than 6 months, as well as group. And adding a gap plan for your clients is the best of both worlds. You save your client hundreds of thousands of dollars a year, and you can also double or even triple your commissions on your typical sale. So that's really important, and we'll talk about that in a little bit more detail in a minute here. So first of all, the biggest part is gap sells itself. What I'm going to show you right now is our 2-minute and 40-second video segment that we put out. It's a nice calming Morgan Freeman voice that you get to listen to, but this will tell you why gap sells itself. Pretty much you show this video. We also have a couple of 30-second spots, but you show these to your clients in advance. They pretty much get how it works. It sells itself. So I'll let you guys watch this video, and we'll pick up when it's over. It's 2 minutes and 40 seconds long, and I think it'll answer most of the questions you have.
Would it surprise you to learn that a large percentage of Americans who have health insurance actually avoid using it? Why would someone with insurance avoid using it when they need it most? Because it costs money. Deductibles, co-insurance, co-pays, and tests like MRIs, CAT scans, and the ER come out of your pocket. This is in addition to expensive premiums you pay the insurance company every month just to have insurance. This is also why families on a budget are forced to buy high deductible plans that are simply too expensive to use. This means illnesses and injuries go untreated until they are forced to go to the ER, sometimes with drastic results caused by waiting so long to be treated. Smart Americans have gap insurance. Gap has existed for years for those on Medicare, but now there are gap plans available for everyone else. With gap, medical visits are simplified for consumers by simply providing both a health insurance and gap insurance card during their visit. Gap pays the costs you would normally pay, like deductibles, co-insurance, and co-pays, and the insurance company pays the rest. It's really that simple. For example, let's say your doctor orders an MRI, a test that can easily cost you as much as $1,000. If you haven't met your deductible, you are responsible for paying that $1,000 out of your pocket. With Gap, you simply show your Gap card and your insurance card. They bill the Gap insurance instead of you. Now, you can worry less about the high costs of ER visits, hospitalization, lab work, and tests by having Gap. Gap insurance is affordable, and most people qualify. It works with most types of insurance, even Obamacare. Find out if Gap is right for you at www.whygetgap.com.
So that website, the whygetgap.com, just so everybody knows, that is the end of the video, which can be chopped off, and you can put in your own website, your own and contact information, whatever you need to do. We can't get the same voice, but we can just put it up as a splash screen. So if anybody wants to use that video, we'll send you the raw video without the ending, and then you can put your own information in there if you have somebody that knows how to edit video as well. So we're going to do some comparisons. So the following estimates are based on a family of four with 40-year-old parents making $65,000 a year on the exchange in Dallas, Texas. Just so everybody knows where we got those numbers. So we looked at the first option. This is your base silver plan. We just picked the second most expensive or second most affordable silver plan in the marketplace there. And on this family, the deductible is $12,000 with a co-insurance of 25%. And then an out-of-pocket max of $14,200. Co-pays for doctors was $20, specialists was $40. Total premium was $1,375. No gap on this example yet, but the subsidy was $942, leaving them with a $433 out-of-pocket. Premium. Now again, this was done pre-ARPA, So this has gone down a little bit, but it's still gonna, be similar. So that's option one. Option two, you can say your client is the bronze plan. $13,600 deductible, 50% coinsurance, max out of pocket of $16,300 for the family, a $35 copay for doctors, but then a 40% copay for specialists. So they're going to pay that specialist bill no matter what until they've met their deductible. And then the health premium on this was $1,010, and after the same subsidy, $68. Again, pre-ARPA. After ARPA, this plan is free. So that's where GAP really pays for itself here. You'll see why when we get to the next example. Option three, that same exact bronze plan using GAP. What the GAP does is covers 50% of the consumer's outpatient, 100% of the consumer's inpatient out-of-pocket expense if they use GAP. So that could bring their deductible as low as zero using GAP, their coinsurance to zero using GAP, their max out-of-pocket as low as $300 using the same GAP plan. And on that same bronze plan that we were just talking about, the enhanced bronze, it's going to take their $35 copay and drop it down to $18 using GAP. And then it's going to take that 40% specialist copay and it's going to pay half of the RBRVS amount. So if that that specialist charges $150, it's going to pay 75 of that for them. And that goes towards their deductible and their out-of-pocket. The money that the GAP insurance pays goes towards that. So they've now reduced their deductible and their out-of-pocket, and they've only paid 75 for a specialist. And in this case, again, pre-ARPA, your GAP premium is going to be $220, and the plan we know, at least right now under ARPA, is free. So the plan's going to cost them $220. They're going to be free bronze plan, and they're going to pay $220 for the GAP insurance. Hey, how can you beat that? I mean, you've given them a free health insurance plan and a plan that is going to pay half of all of their outpatient and 100% of all of their inpatient expenses. It's just a completely unbeatable situation. Okay, so again, Texas, these are based on pre-ARPA rates, but on post-ARPA, you can put your own numbers in there and you know what we're looking at here. So realistically, what you're going to do is you're going to take total annual expenses for that same client of $15,499. That includes if they use their health insurance completely, they met their out-of-pocket expense and their premium of somewhere around $15,499 for the silver, $16,504 if you put them on the GAP, or I'm sorry, on the bronze with no GAP, and about $4,756 if you put them on the enhanced bronze with GAP. Again, assuming that they use their maximum out of pocket because of an inpatient visit or whatever. Again, it may not be as much as 100, it may only be 50%, but there's no way to guess on what might happen. Either way, you're going to save them at least half of what they would pay otherwise. Total out-of-pocket expenses. So, a couple of the details on GAP. First of all, typically consumers don't need to do anything other than present both cards to a provider when they seek any medical services except prescriptions. Those do not, GAP does not cover any coverage on prescriptions at all. But anything else is fair game, any type of medical provider. As long as the plan accepts, as long as the doctor accepts their major medical health plan, the GAP accepts it, period. Most doctors will file the claim for them, just like the secondary insurance card, because they know they're going to get their money that way. Outpatient physician services, including doctors and specialists, are reduced at least by 50%, sometimes more, but it's at least 50%. And the same thing with other outpatient tests like labs, x-rays, CT scans, MRIs. They're reduced as much as 50%, sometimes higher, but it's at least going to be 50%. And then on most cases, GAP covers 100% of consumers' responsibility for inpatient care, as well as outpatient and inpatient professional services like radiation and chemotherapy. So again, it's invaluable in those situations, and it could literally mean the difference between somebody going bankrupt from medical bills or not. So a couple of things on what are the GAP options out there. First of all, when you select a GAP plan for your client, the cost is based on the amount of their deductible and their health plan, as well, of course, as their age. The more people in the family that include GAP, the higher they save, and that's because it's based on number of children and it doesn't take the children's ages into account. So typically ACA plans will max out at 2 times the maximum out of pocket for families of more than 2 people, And in all cases, the gap is going to cover the whole family. So you'll never, never run into a situation where there's not enough gap left to do that. Consumers have to be relatively healthy. Most people qualify, even diabetics. However, many uncontrolled pre-existing conditions are acceptable, but they have to be controlled. So if they're uncontrolled diabetes, type 2 diabetes, uncontrolled blood pressure, cholesterol, any of those, they're not going to be able to qualify for GAP. Even CPAP users qualify as long as their condition is under control. Now, some pre-existing conditions, pre-existing limitations could have a 1-year rider where they can't use it, but that's going to be serious situations. So don't have to worry about that very often. It's very rare that we have a consumer that does not qualify for GAP. Even their height and weight ratio limits are very, very liberal. So it's a great option in that case. So the big question is, what is in it for you? I totally get that. So first of all, GAP is a quick and simple product. Explaining it is very short. The application is very short. You saw the video. Show that video to your clients. They get it. You just have to give them details and you're done. If you're already appointed with the parent company, Philadelphia Life, you can actually start selling GAP tomorrow. If you don't know if you're appointed with them, just fill out the form at the end of the video here and we'll find out. We're going to let you know. So, and if you've been appointed with them and you're already selling GAP, hey, great, you're good to go. All right, GAP commissions are paid on a percentage of premium, just like any other hospital indemnity plan. But GAP commissions typically pay more in years 2, 3, 4, 5, 6, 7, 8, 9, 10 than other indemnity plans. And I can't give specific commission rates in this video because every state is different slightly on the GAP plans. And in a lot of cases, people may already be appointed with the companies and it may be different for them. They may be getting less and, I don't want to step on toes there. So fill out the form at the end. We'll find out if you qualify. We'll, of course, let you know the commissions. And trust me, you will not be dissatisfied with the amount of commission that GAP pays. It's very liberal, very generous. It's a great option for brokers. So GAP, I tell my brokers this all the time, it's the best retention tool you can have. According to JD Powers, insurance consumers are 67% more likely to remain with a broker for 5 or more years if they have at least 2 products with that broker. So if you sell your client a health insurance plan, a GAP plan, a dental plan, a vision plan, you are just increasing the odds that that client is going nowhere. They're going to stick with you. More importantly, you're going to be a good broker. You're going to offer them great services, but they don't want to go through it again. You've got everything they need. You know them. You get everything done. This just helps in doing that even more. It emboldens your power in that respect as well. Okay, so that's it. Real short. I don't want to go into too many details here. Like I promised in the beginning, I was going to try to keep it short. How do you get started? Very simple. Go to www.sellmedicalgap.com. You have to have the www in there. I know, stupid. But again, www.sellmedicalgap.com. It's going to ask you your name, NPN, license state, phone, email address. We will send you the information and a link to get appointed if you're not already. If you're already appointed, we'll send you the information, who you need to contact, or if you want to move your appointment under us for additional commissions, depending on how often you've sold products through those companies, we can work that out. We'll talk on that on an individual basis. But again, www.sellmedicalgap.com, fill out the form, and we'll get you started. I want to thank everybody for getting on the webinar today. For those of you who are watching the live version of the webinar, we're going to do a question and answer session now. For those of you who are watching this on demand, the video will end in just a moment, and you can go to that URL and submit your information. For those of you who are watching on demand, this splash screen will stay up for another 10 seconds or so. Thanks everybody for coming, and have a wonderful day.